Trillions of dollars were wiped out of the market. Companies lost hundreds of billions of dollars in a matter of a few weeks. That's the kind of headlines that you see whenever the stock market crashes. And if you watch the news, the stock market crashes pretty often. And that leads to a very natural and simple question. What exactly has happened to that money? Did money simply disappear? What exactly did it go to? Because if that money was created in the first place, those trillions of dollars, they can't simply disappear to nowhere. If they existed in the first place, they must disappear to someplace. You can't simply make it disappear to nothing. You can melt it down, you can throw it in the ocean. And that's why when you hear that trillions of dollars were wiped out of the market, what exactly did that money go to? Who took that money? Did the billionaires or the rich people orchestrated a market crash in order to steal those trillions of dollars out of the market? Just the recent crash when Donald Trump announced the Liberation Day on April the 2nd, the stock market collapsed and $6.6 trillion of wealth was wiped out in a matter of a couple of weeks. When you hear the news that the United States will be imposing tariffs of 245%, at first glance, to a lot of people, that seemed like a joke, but it ended up to be the reality, which is probably why the market collapsed. Another major market collapse was back in 2022 when we had major inflation and the Fed decided to hike the rates from 0.25% up to 5.5%. And in a matter of a few months, the market lost $9 to $10 trillion of wealth. And that is so much money that most people don't have even brain capabilities to understand that. Just to give you some context, the entire GDP of the United Kingdom is around $3.5 trillion. It's probably even less than that. So, market loses $10 trillion in the United States, and the entire GDP of United Kingdom is what? $3.2 trillion. In fact, there isn't a single country who has a GDP close to $10 trillion or more than that other than the United States and China. In 2022, the market also collapsed and $6 to $7 trillion was wiped out of the market. So if we simply take these three major crashes over the last 5 years, that's almost like what? $20 to $25 trillion of wealth being wiped out. That is as much as probably half of or a third of the global GDP. Where did that money go to? Who took that money? Who stole that money? So here in this video, let's try to answer that very simple and basic question. And this is not just about the S&P 500 that represents the entire market. From September 2022 to January 2023, Tesla's lost $600 billion. What happened to those $600 billion? From January 2025 to April 2025, Tesla lost almost $500 billion worth of market cap in such a short period of time. So market crashes happen every single day. Though some of these crashes are very huge, where the market loses trillions of dollars, sometimes those crashes are really huge for individual companies, where the company can lose $200, $500 billion in a span of a few weeks. And sometimes there are small, where the crash is $10 billion, $20 billion for one particular company. To understand what's happening, we need to have a very basic understanding of what the stock market is. Every single stock is simply a voucher. Yes, when you hear the word stock, think of vouchers or shares or stocks. These are basically analogies of the exact same thing. So, behind every stock, there is a real business, and let's take in this case an example of Tesla. So if Tesla divides itself into 4 parts, each part is going to worth 25%, then we have 4 vouchers, and these vouchers can be sold in the open market. So if the entire Tesla consists of 4 single or 4 simple vouchers, then the value of each voucher is going to be 25%. And whatever the price of Tesla is going to be, you simply take the percentage of that voucher and you multiply it by that price. And that is going to be the value in dollars of that particular voucher. So in this case, if we say that the value of Tesla is $100 and each voucher is 25%, then 25% out of $20 or $100 is $25. So that is the price of a single voucher. Of course, this is an oversimplification. Tesla consists millions, if not billions of stocks. And that's the case pretty much with every single company that you see in the stock market. So when I go and buy a single Tesla stock, I'm buying a single Tesla voucher, and the price of that stock is, for example, $300 or $350, and that gives me a percentage of the total company. In this example, we simply took 25% in order to simplify the entire process for you to understand. And the stock market is one giant auction place. People are bidding for those stocks. Let's, for the sake of simplification, imagine that this is me with my Tesla stocks, and I'm in the stock market trying to sell my stocks. We have plenty of bidders who are trying to buy my stock. One guy offers, I'm gonna buy your stock for $200. Then we have another guy says, no, wait a second, I'm offering you a much higher price. I'm gonna offer you $220. Then there is the third person who offers me, let's say, $250, and so on and so forth. And the more people are offering and bidding for my stock price, the more its value goes up. But let's say that I bought that Tesla stock for $100, and now in the auction is the stock market. So the stock market is literally an auction for stocks or for the vouchers that represents those companies. Yes, I bought my Tesla stock for $100 back in the days, and now someone is offering that to buy that stock for me for $250. What do you think is the value of my Tesla stock right now is? Now it's $250. Why? Because there are people in the world who are ready to offer me that much money to buy that stock from me. And the more bidders there are going to be to buy my stock at a higher price, the more it is going to worth. But what happens suddenly if all those people decide that, listen, we no longer want to buy your stock. We no longer believe in your Tesla stock, and they stop bidding for my stock, but I still want to sell my stock. So I'm going to offer a lower price. If nobody wants to buy it, for example, at $250, I'm going to go and offer who wants to buy my Tesla stock at $220. If there is somebody who's going to buy it, yes, the deal is closed. But what if there is nobody who wants to buy it at $220? I'm going to offer a lower price. I'm going to offer $200. And if nobody wants to buy it at $200, then I will offer $180. And at some point, we are going to come to an agreement. What is the true value of that stock? So every time a transaction takes place in the market, if I have purchased my Tesla stock for $100 and then I sold it to someone else at $250, I made a profit of $150. That means that wealth transferred from one hand to another. So every single time when there is a transaction and somebody buys a stock and somebody sells the stock, wealth constantly changes hands every single time. This is an example of one single stock. Remember that there are billions of Tesla stocks in the market alone, and that's just about Tesla. And if you take the entire market, where every single company has billions of stocks in the market, and there are plenty of investors in the market who are fighting for those stocks, you see that the stock price changes every single second. And in some cases, or in plenty of cases, or in every single case, the price of the stock changes every single millisecond. Why? Because there's so many bidders on one side and there are so many sellers on the other side. I'm a small fish in the entire market. It doesn't matter how much money I have. I'm gonna be a small fish. You have pensions funds. These are government-backed corporations. They collect taxes from people who pay payroll tax, and a portion of those taxes will be invested in the US stock market. You have hedge funds that take rich people's money, and we are talking about hundreds of billions of dollars, and they invested in some of these stocks. So they're also bidding in the market. You have the entire Wall Street. You have investor banks. You have billionaires. You have the average investors like me. So it doesn't matter whether you have $1 million, $10 million, $100 million, or $1 billion. You're going to be a small fish in the entire market whose influence is going to be very minimal. And that's why every single time when prices jump up and down every single day, what do you see is happening? Wealth changes hands. Somebody is getting rich and somebody is getting poor. But the question is that why would anybody sell it at a lower price? It doesn't make sense. Well, people have different reasons to buy stocks at a particular price, and people have reasons why would they sell the stock at a particular time. It could be a person from Tesla who joined Tesla 10 years ago or maybe 15 years ago, and they bought those stocks at $10 per share. And now whether the stock is going to be 270 or 280 or even 200, he still ends up making a profit. On the other side, there might be a hedge fund who believes that Tesla stocks still have an opportunity to grow to $300. Yes, this hedge fund was not an early investor in Tesla, and yet they can profit out of it. So whoever understands the market better, they will buy at the right time. Of course, you cannot simply time the market, but at least you can find out the true valuations of the stocks. And that's one of the things that we teach in our academy, where people actually find out if this is the price of the stock, is it the true value of that stock? And that's why every time a transaction takes place, somebody is getting richer and somebody is getting poorer. So if you look at Tesla stock, for example, there were plenty of people who were bidding for Tesla stock and they were willing to buy that Tesla stock. Some of them offered a higher price. The price at this point was around $200, maybe slightly more than that. But people offered $250, they offered $350, and some people went as high as offering over $400 per stock. And then the bidding stopped because people or investors thought that's maybe too much for a Tesla stock. And the people who bought the stock at this point, they're like, wait a second, I bought the stock at $200 and now there are people in the market who are willing to buy my stock at $400. What do? I will get to the market and I will start selling my stock. So here at the top, there are a lot of people that are offering to sell their stocks because they bought them, let's say, at $200, and now they're more than happy to sell them at $450, but not many people are willing to buy it because why would I buy Tesla stock at $450? Especially when you have on one side people are selling, on the other side there are not enough people to buy it, the stock starts going down. And when the stock dips and it goes down, not many people are excited to buy. And here's the most interesting part out of this entire story. Most of that wealth or most of that money did not exist in the first place. I have my Tesla stocks, and when the price of Tesla went from $200 to $450, did I sell my Tesla stocks? No, I still kept them in my portfolio. So I got rich on paper by 150% in that short span of time. Did I sell my stocks? Absolutely not. And then the price of that stock or the price of Tesla went down from $450 to as little as $220. It wasn't a real loss of wealth because that wealth didn't exist in the first place. If I would have sold my stocks, yes, in that case, I made a real profit. But since I did not sell my stocks because I'm a long-term investor in Tesla, that wealth wasn't created in the first place. So whenever you see that the stock market collapsed and $7 or $8 trillion worth of wealth disappeared from the market, you have to understand that most of that wealth did not exist in the first place because most of investors don't sell their stocks. Take Elon Musk, who is the largest shareholder of Tesla. When the market collapsed, he lost $100 billion. But did he sell his stocks at the bottom for him to realize that loss? No. Did he cash out his profits when the stock of the price was at the top? No, he did not. So that wealth was created because there were so many people in the market or so many bidders who were offering to buy Tesla stock at that high price. The moment they stopped offering to buy that price at that high price, what happened to the price of the stock? It started falling. So the money didn't disappear because that money didn't exist in the first place. It was all on paper. Money did not change hands. Yes, a fraction of that money did actually change hands. A fraction of the sellers did actually started selling. Some people bought it low and they started selling it at a much higher price and they made a real great profit out of it. But this is a fraction of the total money. So whenever you see the news that $7 trillion was wiped out of the market or $10 trillion was wiped out, that's because plenty of investors in the market, they stopped bidding for that price, for the price of that stock at a much higher price because they saw that the market is collapsing. Why would they actually start bidding? And when they stop bidding, the market keeps crashing farther. But at some particular point, when people realize that, well, the market crashed and now the price that I see on the screen does actually represents the value that this business has, At this price, I'm ready to buy it. And that's why the market stops collapsing. And in order to know that, you have to be a really great investor. And that's one of the things, by the way, we teach in our academy, so that people know how to do valuations and they know how to find out the true valuation of the stock, so that they don't buy those stocks at a super high price and then watch how the stock price collapses and they make a loss. In fact, they will know at what price it's actually great to buy that stock, because the price that you see on the screen does actually represent the value of that stock. So it's a good investment to make, and vice versa. And that's one of the most important things that you need to learn in order to profit out of the market. But here's how poor people think when they see a market crash. Rich people lost so much money. You see those headlines on CNN or usually on liberal media that this billionaire's lost $100 billion, and now Elon Musk is in chaos and he's frustrated that he lost $100 billion. Well, nobody actually lost $100 billion. Not Elon Musk, not Jeff Bezos, not Bill Gates. Not a single billionaire lost so much money. Yes, it might make you actually feel good about yourself and trash talk the billionaires or the rich people. But most of those people, they don't sell. They know the value of the business. And when they know when the price of that stock is going to be trading at a much higher price than the value of the business, that's when they sell. And that's why sometimes when you see that the stock market is going through the roof, you see the news that some billionaire or Jeff Bezos sold some of his stocks from Amazon, or Mark Zuckerberg sold a portion of his Meta stocks, and so on and so forth. The second thing they usually say that, you see, everybody's suffering and that's why I have lost my job, that's why I'm doing terrible. Some people justify their misaction or not taking action, not learning how to invest, not learning how to save money, not learning anything about financial education, and they say, oh, well, if billionaires are losing so much money, well, it's fine that I am losing. But in reality, billionaires are not losing, but you actually lost your job, but you're actually not investing, but you're actually suffering financially. And this is the best part. This is why I don't trust investing. This is why I don't invest. Look at what's happening in the market. The market is crushing. This is probably the biggest lie that people tell themselves in order to justify their misactions. Yes, the market crashed, but a market crash is simply an opportunity for a rich person, and you're simply using that to justify your ego and your misaction. Because here's what actually happened in reality. If this is the S&P 500, first of all, I did not lose any kind of money because I did not sold my stocks in the first place. Secondly, the market crash literally tells me which stocks are great and which stocks are bad. Behind every single stock, or a stock, is a voucher that represents a business. And when the market crashes, there is some kind of chaos in the economy, and it tells us how the business is doing. So we have a certain industry and we have one business that is very strong, that has really great management, and they survive the crisis very fine. But on the other side, you have a business that is shaking during a crisis. So I know that this business is being run by people who are not maybe as smart as the people who are running the first business. Or maybe during a market crash, I would know whose business model is much more stable. And that's why I know that this is a great stock. This is a great business. And I will start buying their stocks at a bargaining price because nobody wants to buy them right now since the market is crashing. So I will buy more of their stocks. And then what happens after that? The market recovers and I have actually made plenty of money over here. And then the market keeps growing because that's what the market does. And that's another beautiful thing. Any rich person or any investor or any professional investor understands that we're living in this age where the economy keeps growing over time. And when the economy grows, the market keeps growing. The economy keeps growing, companies sell more, businesses make more money. Therefore, me as an investor in one of those businesses or multiple of those businesses, I will make plenty of money as well, which is going to make me richer. Secondly, even if we say hypothetically that we are in a period of a Great Depression and the economy is growing very, very slowly, will I still be making money? Well, technically, yes, for two reasons. First of all, even if there is a Great Depression, even if there is a Great Recession, no matter how big the crisis is, people have to live. They go to work, they buy bread, they buy Coca-Cola, they will keep buying basic technologies. So some transactions will be taking place and there will be businesses who will keep making a profit. And you as an investor will keep making a profit out of it. Just because there is a financial crisis, will people stop living in their houses? Will people stop using waste management services, for example? Well, absolutely not. And that's why even if there is a financial crash or a financial crisis, businesses whose stocks being sold, traded in the stock market will keep making a profit. And secondly, whenever there is a crisis, the Federal Reserve starts printing money in order to save the economy out of that crisis. And because now we have more money in the economy and the exact same amount of businesses within the economy, what exactly that does to the value of those businesses? Yes, maybe the values didn't increase much, but because now we have so much money in the economy, the prices of those stocks and businesses starts to rise. So the poor people will get poorer, but because I have my wealth in the stock market, my stocks keeps rising. And that's another important thing that rich people understand. And that's why when you hear the news that trillions of dollars were being wiped out of the market, rich people are not worried. Even if you believe that rich people lost so much money, it's basically an opportunity for them to buy those stocks at a bargaining price. If you want to find out how you can join our academy, there will be a link in the description of this video where you can learn more about it. That's it for today. Thanks for watching, and I will see you in the next one.